what was your first capital raise like? I know people were asking you. And then after that, what strategies you have developed, if you can share with us?
Oh, that first one. Oh man, Vinky, that was a tough one. That first one, the very first one that my business partner Julie and I did, we had just partnered up and she had been raising capital on her own for several months at that point. And I had dabbled in a couple of deals and had seen a little bit of success. So we thought, surely between the two of us, if she could raise, let's say, $500,000 from her database and I could raise about that much from my database, surely when 500 plus 500,000 equals $1 million, right? Surely we should be able to raise $1 million together. So that first deal we did together, we committed to $1 million that we were going to raise. And that was the hardest raise we have ever done. We had to pull out all the stops. We were calling people one by one, scraping the bottom of the barrel, trying to find anybody who would be interested in this deal.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. As a real estate investor and a fund manager, I'm always excited to explore the world of real estate opportunities with you and for you. Today, I have a very special guest, a good friend, Annie Dickerson. Annie, welcome to the Real Estate Vibe Show.
Thank you so much, Vinky. It's a pleasure to be here with you and your listeners.
Thanks. I'm really happy to have you with me today, Annie. Annie is a seasonal real estate investing expert for over 15 years and a co-founder of Good Egg Investment. She has been named Real Estate Investor of the Year by Motley Fool, which is pretty exciting. And today we're going to be discussing her journey from syndication success to empowering investors. And I think I wanted to discuss two main topics with you. Any capital raising and maybe some due diligence as well. So we wanted to learn how you started, because capital raising and due diligence are two critical pillars in real estate investing that can make a deal or break a deal. We all know that, right? And solid strategy for both, helps us scale our portfolios, confidence, and even help us make informed decisions. And even, most of the time these are the profitable investments for all of us. So let's explore that a little bit, Annie. And I I know when we first met, I got to learn about you a little bit, that how you started from being teaching to your syndication journey. So I wanted to ask you this question: how did you first get into real estate, and what really inspired you to found this good investment company?
Yeah, I never intended to get into real estate or business. In fact, all through growing up, my parents always rented. They never bought a house, so I never got to see behind the scenes of how that worked. And I never grew up around business owners or entrepreneurs. So for me, it was, I was part of an immigrant family, came to this country when I was 4 years old. So I was always taught the straight and narrow. You got to get straight A's, you got to go to an Ivy League school, you get a job, you climb the corporate ladder, and that's the definition of success. And so I was blinders on. I was focused on that for a lot of my young adult years. But I rebelled in my own little ways. So I did, in fact, I got straight A's, I became valedictorian, I went to an Ivy League school, but when I graduated, I decided to join Teach for America to teach in inner city schools. So I taught fourth grade. That was my first job out of college.
Mhm.
I had no inkling that I would be involved in real estate or business or anything like that. My big goal was to help close the achievement gap, the opportunity gap, and to make sure that all kids everywhere had this opportunity to get a great education. That was my goal. But what happened was, along the way, as I was teaching, and teachers are notorious for having a very let's say, modest salary. And so, my paychecks were nothing to get excited about. But I thought to myself, I said, this is a real bummer. Were living in Washington, D.C. at the time. And I said, if I really fell in love with teaching and I wanted to teach for the rest of my life, it would be pretty challenging because of the low pay. And I
Mhm.
said, well, there's got to be another way to maybe supplement my income or some other way to make it possible for somebody to continue in their passion, even if it doesn't pay them very much. But at the time, I didn't know anything about real estate investing. But as luck would have it, my husband and I at the time, we had checked all the boxes, right? We got
Mhm.
married and we got a dog and we said, okay, well, what's next? Oh, buy a house. Let's buy a house. So we found a realtor, and lucky for us, our realtor was not just any realtor, but he um, kind of advised us towards house hacking because we were in our young 20s and we thought, oh, let's be cool. Let's get a trendy loft or condo. But our realtor said, those are nice, but if you think about the long-term value, you might want to go for one of these row homes that has not one, but two units.
Exactly.
And so that was our first introduction into house hacking.
Mhm.
And we thought, this is amazing. This is how I can supplement my teacher income because
Mhm.
every month we'd get a check from our tenants and it wouldn't cover the whole mortgage, but it would cover a little bit. And so that was my first introduction into the power of real
Mhm.
estate investing. And we
Mhm.
kind of went from there and we house hacked multiple houses. We named them after letters of the alphabet. So we had Alpha, then Bravo, then Charlie, and Delta. And by the time Delta came along, we had
Mhm.
kids now.
Uh-huh.
And it was suddenly a lot harder. And now we were living in the Bay Area where we are now. It was more expensive and with kids harder to keep moving around from place to place. So that's when I started investing out of state. And once I did that, that kind of opened up all these doors, and I got
Oh, yeah.
obsessed with
Mhm.
investing out of state just for myself. I had no idea that that I could even have the opportunity to help other people. I just thought, I'm just going to do this for myself, and I'm going to
Mhm.
start building up a small portfolio of these multifamily homes.
Mhm.
And so I started investing out of state. And every time we would get together with friends and family, they'd say, Annie, what are you up to these days? I say, oh my gosh, I found this new market. I'm looking at these properties. And the passion would just ooze out of me. And so,
Yes.
of course, they would say, oh, that sounds amazing. Teach me how to do that. I want to do that too. And so I'd say, yeah, pull up a chair. Let me teach you how to do it. I'd start going through the steps. And inevitably, somewhere along the way, their eyes would glaze over and they'd say, oh, no, 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 no. I don't want to do all that work. That sounds really hard. I
Mhm.
just have this pile of money. And could I just put my pile of money with you on your next deal? And at the time, this was back in around 2017, I was like, oh, I don't really know how to do that. I only invest for myself. So sorry, good luck. And I kind of went on my merry way. But I started to have so many of these conversations that one day the light bulb went on. I said, wait a second. If I could just help enough, if I could just figure this out, I
Mhm.
could help all of my friends and
So many.
family because they all have the same problem. And then maybe
Right.
I could help other people too, because surely if my friends and family are running up against this problem, other people have this problem too.
Mhm.
And so through the digging that I did then, that's when I discovered syndications. And once I discovered syndications and realized that it was more or less the easy button for investing in real estate, I thought, why didn't anybody tell me about this? I'd been investing in real estate for about 10 years at that time. And I thought if I had found this years ago, I could have, expanded my portfolio so much more in that time. And so that's really the linchpin that led me to then get into syndication, was this desire to help as many people as possible to discover this little known secret of how to invest in real estate without being a landlord.
Wow, quite a journey. I love your story. It kind of resonates with me because I have kind of similar story too. Because we became default landlords too. That's how we started. And I come
Hmm.
from the academic area as well. I know it was kind of light bulb moment for me too. I'm like, oh my God, I didn't even know if that exists. It's kind of a whole new world basically. So now
Yeah.
I think I saw in your bio that you have done 1.4 billion in commercial real estate, right? So can you share some of the key strategies that you have formed for yourself or you have kind of figured out over the years because you've been in real estate for how many years now? Maybe 15
A
years?
little more than 15 years now. What
Yeah.
year is it? Yeah, almost 20 years.
Yeah, 20
So,
years. That's a
yeah.
long time. So you might have just kind of fine-tune your systems, your
Yeah.
strategies, if you can share with me.
Yeah, one of and there's different strategies or different thoughts that I keep in mind
Hmm.
on the investing side versus the syndication side. So, as a
Hmm.
personal investor for my own portfolio, and I invest in our own deals as well as with a lot of other sponsors. And, then the things to think about when we are putting together a deal for our investors and syndicating and raising capital. But I would say one thing that straddles both is to stay in my lane. Oh boy, stay in my
Hmm.
lane. That's something that has gotten me again and again is I see the shiny object and I say, oh, somebody else is making money over here doing this thing that I don't know very much about, but surely if they're making money doing that thing, I could make money doing that thing.
Hmm.
And so I've done that on both the investor side and we've done that a little bit on the syndication side is we've dabbled in areas that we're not experts in. And sometimes it works and then we're able to continue to grow in that area. For example, when we expanded from multifamily assets to hotels and we were able to
Hmm.
find a really great partner and now we've expanded our hotel portfolio and that has created great diversification and cash flow for our investors. So that worked out really well, but there have been times, especially shiny object syndrome with for example crypto in my personal investing journey, where I thought, oh, I know enough. I know these people. I'll just put this money in with them. And I definitely lost my shirt. So that's a lesson that I've learned across both is definitely to stay in my lane. Also, not to try to time the market. We're in a very interesting time right now
Hmm.
where, back a couple of years ago, everybody wanted to jump onto this bandwagon called real estate investing, right? Everybody was like, oh, real estate investing, that's the next hot thing. And even if they didn't know very much about it, they thought, okay, this is the hot ticket. And, the real estate market has turned in the last, year or a couple of years with interest rates rising and deals not penciling and the transaction volume going down. So a lot of things shifting. And so that's something I've learned is, real estate is a cycle, as they always say, but when you live through it, it's different, right?
Hmm.
And so real estate is a cycle, which to me means there's no best time to invest in real estate and there's no worst time to invest in real estate. It's about the consistency and having that view for the long term, because real
Hmm.
estate is not a get rich quick scheme. It's a very consistent, steady, and stable way to grow your wealth over the long term. And then I would say, one more thing that comes to mind is that real estate, as much as it is about buildings and land and markets and numbers and spreadsheets, it's more about the people. And I've
That's so true.
found it's so true, right? I've found really shiny looking deals where I didn't know the people that well, and inevitably it didn't go so well. And I've also found deals that maybe didn't look so hot off the bat, but I took a chance because I knew the people and my values aligned with them and I knew them well and I knew their track record. And sometimes those deals turned out to surprise me.
Hmm.
And so that's what I've realized is this is very much a people business, whether you're investing or you're looking to make connections to do your own deals.
That's so true because I think your values, your ethics, that play a big role. And that, I don't know if it's going to resonate with you or no, but let me talk about that a little bit. How people say, check the track record. So it's not necessarily the operator's track record that's important, saying, okay, they have closed that many deals. It's important to know they have closed how many they have gone full cycle, or how
Mhm.
they've been communicating to their investors, or how often they are making the distributions. Are the investors happy? That's the most important thing. Are they creating that experience what the investors are looking for? And other than that, I think the other thing important is for the newer people who are coming into the industry, like their track record, the thing we do not have a track record, but what have they done in their past life?
Mhm.
How they've been have dealing with all the challenges in their life, because how they've been dealing with the other all the situations in their life, that's how they're gonna do in the real estate too. They're
Yeah.
gonna be any different just
Right.
because they move into real estate all of a sudden. It's not like that everything is gonna change or they're gonna be like super successful day one. No, but if they were successful in your previous life, they'll do the same again. It's just like a
Mhm.
repetitive process. It's your patterns that you're following over and over again. I
Yeah.
think that's what I just look in people, because
Yeah.
I just feel like, more than money, everybody's looking for experience.
Mhm.
And
Yeah.
if you're creating that experience for the investors from 10 feet away because they don't want it to get their hands dirty, you are doing something good and the money
Exactly.
follows, you know.
Yeah, I couldn't agree more. And I think to add on to the track record piece, and this is something that you'll see in our track record too,
Mhm,
is there are a lot of deals that we sold in 2021, even into
mhm,
2022, that looked amazing. They looked
mhm,
so amazing. And it's easy to look at those deals and say, wow, this group
mhm.
really knows what they're doing. And to a certain extent, we do.
Yeah.
And there's also the market fluctuations at play. And so a lot of people did really well at the
Mhm,
height of the market when they were able to sell something in 2021, 2022 at those really high valuations. And so we were able to ride that wave. But I think it's when you look into track record, it's beyond just the numbers. It's about that story, as you mentioned.
mhm,
It's about digging in and understanding, okay, but what were the decisions that were made here? What were the
mhm,
struggles? Where did this deal maybe not go according to plan? And what did this team do about that? How did they keep their investors in the loop? And
mhm.
that's the character. Those are the character traits that you're really looking for. And that's sometimes it's harder to dig for. It takes a little more work to find.
That's
But
true.
once you find that and you learn those character traits, as you said, the way that somebody does one thing is the way that they do everything. And so
That's
if
so
you can
true.
find just even that one example, that's going to tell you a lot about how they operate.
That's so true. Because the thing is, most of the time, people run after the shiny objects, like you said,
Mm-hmm.
multiple times. And the numbers, if the deal is doing 50% return or 30% return, this has to be good. But I think it needs to be kind of, explore a little bit more further before getting into anything. So let me go back, when you started syndicating, you've been doing your personal stuff and happy. Personal stuff is easy because it's your money, it's your time, it's your energy. So it's a different focus. But when you're expanding, bringing others alongside you, that's a different game altogether. Even though your patterns are the same, you're not going to change. You're going to do things the similar way, but in a larger, bigger spectrum. So, what was your first capital raise like? I know people were asking you. And then after that, what strategies you have developed, if you can share with us?
Oh, that first one. Oh man, Vinky, that was a tough one. That first one, the very first one that my business partner Julie and I did, we had just partnered up and she had been raising capital on her own for several months at that point. And I had dabbled in a couple of deals and had seen a little bit of success. So we thought, surely between the two of us, if she could raise, let's say, $500,000 from her database, and I could raise about that much from my database, surely when 500 plus 500,000 equals a million, right? Surely we should be able to raise a million together. So that first deal we did together, we committed to $1 million that we were going to raise. And that was the hardest raise we have ever done. We had to pull out all the stops. We were calling people one by one, just scraping the bottom of the barrel, trying to find anybody who would be interested in this deal.
Mhm.
And at the end of the day, we missed the mark by over 50%. We didn't raise $1 million. We didn't raise 800,000. We didn't raise 700. We didn't even raise 500,000. We ended up with 420,000, which included
Mhm.
about, I think, $100,000 from my mom. So that tells you how hard it was when we were trying to get this thing off the ground. But that's, that's back when we were, see, here's the thing is that was very shortly after we had launched Good Egg Investments. And so we didn't pour a lot into our investors yet. We hadn't had that opportunity yet when this first deal came along. So we kind of just, we said, here we are, this is what we're all about. And by the way, here's our first deal. Well, of course, people were like, well, you just launched. I don't even know you. I mean, I know you in a
Exactly.
personal sense, but I don't know you in this lens. I want to know what your track record is. I want to know how you're going to do things. Maybe by the second or third deal, then
Mhm.
maybe I'll invest. Um, and they hadn't really gotten a lot of messaging or education from us. In other words, we hadn't really poured our energy and our insight, our wisdom into them yet. And so after that first raise, we then
Mhm.
started to really and this is where my background in education, and this from your background in academics,
Mhm.
comes in is, there's a lot of similarity between education and raising capital, because it turns out raising capital is all about teaching people
Teaching
how all
people.
of this works,
Mhm.
right? You teach people how all of what's inside this black box of real estate investing, and
Mhm.
suddenly it unlocks this whole world for them, and then
Mhm.
they understand it. And that's the key. When they can understand it and then they feel confident about it, then they say, okay, I'm ready to go. So
Mhm.
we spent a lot of time in that, the first year or two, really pouring out our wisdom and our insights in a way that people, the everyday person who has no investing experience, walking down the street, they could understand what we were talking about. So we did a lot of, I remember typing things like capital preservation, and I say, oh, it's too much. Delete, 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 delete. Protect your money. Simple phrases that
Mhm.
everybody could understand. We didn't need to make it complicated. We didn't need to make ourselves sound smart. Our goal was to help our investors feel like they were smart.
They understand.
And through that, that's when people started to come, people were attracted to us because all of a sudden they thought, oh, this I can do. This I understand. I can do this now.
Mhm. That's really good, just like it's like I like it how you said it's not about how smart you are, it's about, how smartly your investors understand you, the concept that you're trying to share with them. And that's very important. And for them, it could be all gibberish if you're talking at very high level from where the place you're coming from. Because think about it, the person who knows everything inside out of it and the person who's brand new, that person do not know anything. And then I think that's what I see a lot of times. People hesitate to even ask questions because it's not like that they are not smart. They might be really, really smart in their field, whatever they are doing, because they're making tons of money. They are career investors, but they do not know your field. So that's the time is like they do not have any questions for you because they do not have enough knowledge. And that's the knowledge gap. And that makes it harder for people to raise the capital or make that first connection even with people because
Exactly.
it's not all about getting on the first call and asking the investor what kind of returns you're looking for, what kind of
Right.
deals you want to invest. I'm like, whoa, what is
Yeah.
this? I don't even
Right.
know anything. What kind of
Yep.
questions are these? And this is, I have seen very normal phenomena in the industry, but that's not the right way or right approach. And thanks for sharing that. So you wanted to add more to it, about your systems that you have developed now or the strong strategies that's working for you seamlessly for the capital raise?
Yeah, sure. So, we were very fortunate. We got in at a really good time back in 2018, 2019. And, deals were aplenty back then, and cash flow was great. There were a lot of value add opportunities at that time. And so the first year we did 9 deals, second year we did 9 deals, and slowly our raise capacity was able to grow and continue to grow and grow. And because we did so many deals, with each one, we were able to test new systems and new processes. And so, for example, in the early days, everything that we did was manual. Every time somebody would say they wanted to invest, we'd send a separate email and we'd put it into a spreadsheet. We'd type out the
Mhm.
numbers, you calculate it separately. And with each one, we'd say, okay, well, what if we just automate this little piece? What if we just had email templates instead of typing
Mhm.
it separately each time? What if we used a CRM to then automate this process?
Mhm.
And what if we started building out educational resources so we didn't have to wait for investors to ask us. We can pre-serve them the
Mhm.
information before they even ask.
Mhm.
And so little by little, we were able to build up those systems and processes through the repetition of doing deal after deal. We tried not to do
Mhm.
each capital raise the same. We tried each time to improve a little bit. And most importantly, we listened to our investors. And every time they gave us feedback, it was like gold because it was wrapped in a complaint sometimes. Yes, they would say, I'm really frustrated by this part. And we say, okay, I hear you. And thank you so much for
Mhm.
telling us that you're frustrated by having to, let's say, click these 2 buttons when you could just click 1 button. Thank you, so that we can simplify that for not just you, but everybody else.
For everybody else. Yeah.
And so it was a lot about listening and a lot about getting creative and really thinking as an investor to figure out what is that ideal process that we would want to have, and how can we little by little start to build that and create that for our investors.
So when you're conducting a due diligence on a new deal, what are some of the non-negotiable items that you pay attention to, to make sure that this investment is going to be good fit for my firm, or is going to work out the way we think or we project, or you project actually, not me.
Yeah. So it's the same actually for my personal investments as well as on syndications, is we always start with our own goals first.
Mhm.
And I've fallen into this trap where you look at a shiny object. I mentioned that already, right? You look at a shiny object and you say, I don't need my goals. I'll just go with these. This looks great. But what I've learned is you've got to be very rooted in what you're looking for. And so we have a very clear, we call it our buy box of what we're looking for, and more importantly, what's outside of that buy box.
Right.
If a property is, for example, too old or has too much deferred maintenance or has high vacancy, those are things that we're not experts in. There are certainly people out there who love those types of projects. That's their bread and butter. But
Mhm.
we have to, like I said earlier, we have to pick our own lane and we have to stick in
Mhm.
that lane. That's how we
Mhm.
can make sure that we mitigate the risk for our investors and maximize the chances of success.
Mhm.
So, with our buy box, we have properties of a certain size. For example,
Mhm.
we don't typically specialize in smaller multifamily, let's say 20, 30 units. We
Mhm.
typically go 75 to 100, sometimes 200 units. And we're
Mhm.
looking for typically newer builds with
Mhm.
very little deferred maintenance, with some value add. So these are all
Mhm.
things that we do within our kind of at a glance
Mhm.
phase, where we're looking at the property high level first, because we look at so many different potential opportunities that we have to have this quick screen process where we're looking through and we're just checking the boxes and we say, yep, this one checks all the boxes. Let's then proceed to the deeper due diligence and the underwriting and spend more time really testing this. And once it passes that initial gauntlet, then we really dig in and we're testing all the assumptions from all the different angles. And we're also looking at who are our partners in this endeavor? Often we have partners on the ground, as well as property managers, who are our day-to-day partners in these
Mhm,
assets. So we're looking at, okay, how well does this team jive together through this
mhm.
due diligence process? That's a big part of it too,
It is.
is
Mhm,
are we, when we ask questions and we're testing assumptions, how are they taking that? And are they able to come up with creative solutions? And so that due diligence process is as much about the numbers and the analysis as it
mhm.
is about the people and how we're all working together. So there's a lot that goes into that to ensure that we have a stable foundation, both on the people side as well as the number side, the business plan side, to ensure that we maximize our chances of success.
That's good. And you mentioned very key thing, partners or people. So I'm going to ask you one
Mhm.
question regarding that. So how are you maintaining that strong relationship with your partners or investors throughout the whole project? What is your, I would say, well, how you're creating that differentiation for yourself? Because there are so many people out there.
Yeah. Well, it's definitely so there's partners and there's investors, and
Mhm,
the communication is key on both ends.
mhm,
So with our partners, it's very easy with partners to get lost in the business aspect of things.
mhm,
You hop on a call or a Zoom meeting and you focus on, okay, this is what's happening with the property, this is what needs to be done. But we know that for a lasting and a really deep and meaningful relationship with partners, it has to be beyond just the business. So we do everything we can to meet up in person as much as we can, to see the whole 360 of who our
That's
partners are as people, their
mhm,
families. We get to know them, their sense of humor, all of
mhm,
what they like, what their
mhm,
hobbies are,
mhm.
because it's all important, because it's not just about the business. If it's just about the business, you're always going to hit a wall. And when things get hard, the partnership is going to start to see some cracks. So we try to work really hard to cement that relationship from very early on to make sure our values are aligned,
Mhm.
and that when things get hard, because they inevitably will, that we are kind of singing from the same song sheet and we're kind of the cut from the same cloth, let's say. And so that's on the partner side. On the investor side, communication is absolutely key. I remember being an investor, still in some deals,
Mhm.
where you just don't hear from the sponsors and you don't know what's going on. Maybe something good, or maybe they're trying to figure it out and maybe nothing's wrong. But it's when you don't hear from them that you, as an investor, start to question, you start to dig, and you're like, what is going on? And you start to feel anxious. And that's the last thing that we want for our investors. Because as you remember, I got into this as a teacher, as a mom. I
That's
wanted to
good.
help other women and
Mhm.
moms and families to get into this. And I know that busy moms do not need anything else to worry about. They do not
That's so
need one more
true.
thing to have to dig into. And so we try our best, and we're not perfect at this, but we try our best to be proactive on our communications. If there's something we know our investors are thinking about or they're worried about, we try to get that information up front. And even if we can't get the information up front, or if we're at a standstill, or if we can't move forward, we tell them that. We say, here's where we're stuck. This is what we're working on. And this is what we hope to be able to do. And this is
Mhm.
what it'll mean for your investment. So it's not always we wrap it in a pretty bow and then we
Transactional.
present it to you. It's we're in this together. We're partners together, and we're going to keep you in the loop, even if it's not great news, but we're going to make sure that you're in here with us and you're in the loop every step of the way.
I like that. I think should always be more than transactional relationship because otherwise, like give and take, just transactional, right? So, I mean, we are on this earth, we came with a purpose, just connect with others and help each other grow. So, if we are just in the transactional relationship, we are forgetting our purpose. And that's very important to me. I just feel like all my investors, all the people around me, they're kind of extended family because you're getting into a long-term relationship. And I love
Mhm.
your mindset, how you're handling those relationships. That's pretty awesome. So I'm going to ask you one last question. Have
Yes.
you seen any or encountered any biggest challenge throughout your journey? Any setbacks that you like to share with us, and how did you overcome that?
Ooh. There's so many. There's so many that come to
Share
mind.
one. Share one
I
with us.
had no idea that when you get into business, business is very much a spiritual journey.
It is.
And I had no idea what I was signing up for, but I'm so grateful for this journey
Mhm.
because it has pushed me beyond all my bounds.
Limits. Mhm.
I would say actually the biggest challenge, and it's an ongoing thing because it just meets you at every phase, is actually my partnership with my partner Julie. She and I
Mhm.
got into this from the very beginning because we were both moms and passionate
Mhm.
about helping moms get into this. And we
Mhm.
were very aligned, very complementary in our skill sets. And
Mhm.
so it worked out really well, especially in the early phases of getting the business off the ground.
Mhm.
But at a certain point, there were certain things that we disagreed on and
Mhm.
certain friction points. And when you're in such a close business partnership where you're talking to somebody every single day, they are a fantastic mirror for you
That's so
and
true.
all of your blind spots. And it
That's
is so hard to see
Mhm.
your own blind spots and to have them mirrored back to you. And this is where a lot of partnerships fail is
Mhm.
people say, oh, I don't want to deal with that. That's not true. You are the problem, not me.
That's true. Ego.
And Julie and I have done so much work on ourselves and together when we've hit those rough patches to be able
Mhm.
to say, okay, I hear you and I see my own faults in this. I see my own responsibility in this. And I'm going to work on this and I'm going to come back. And each time we've had that respect for each other and we've been able to help each other grow. It hasn't been easy. It's been some of the hardest challenges of my professional career is growth through this partnership, but it's also been some of the most gratifying.
That's true. I agree with you. And that's the true growth, actually, because if you do not have that kind of relationship, it's kind of disagree to agree or agree to disagree kind of situation. Because if you don't have that, you're just working with your clone and you're going to get only so far. So you need that opposite person or the opposite energy in your life to create that yin yang, right? That's what they call the
That's
energy.
right. Yep.
Yeah, so that's how you're gonna grow and expand much faster. Thanks for sharing that. So I think we're out of time. I would love talking to you forever because it's such a great topic. But can you share one golden nugget with my audience, please?
One golden nugget. Oh, one golden nugget is actually I have it up here on the board in front of me. Don't quit your daydream. I had 9 jobs in the 10 years after college. I kept quitting jobs, but I never quit my daydream. So whatever you're dreaming about, keep dreaming about it because it's leading you in a good direction.
Thanks, I love that. So this brings us to our vibe rapid fire round. I'm gonna ask you 5 questions. You're gonna answer it in one word or one sentence only. Are you
Okay.
ready?
I'm ready.
Okay, the first question is, what is one of the most important thing you have learned in your life, and how did your life change after learning it?
I would say one of the most important things I have learned is mindset and energy are everything.
That's true.
And
I like that.
my life has changed exponentially from that, just knowing there's no limit, upper limit, except myself.
That's so true. I agree 100% on that because we're the one, we just come in our own way and stop us doing things because of our fear. And fear is nothing. It's just like the unknown. Like I was talking
Yes.
earlier, it's a knowledge gap.
Yep.
Once you have the understanding, there's no fear. So share one good book with my audience that you like beside Rich Dad, Poor Dad.
Oh man. I would say Emerging Real Estate Markets by Dave Lindahl is a fantastic one. It really got me started in investing out of state and taught me what to look for in a market to invest in.
Great. So in one word, what does life mean to you?
Impact. It's about making an impact, not just in your own life, but in those around you.
I love that. What is your biggest passion?
growth and learning and doing new things and adventure. It's challenging, but it is also very rewarding.
Oh, I love that. My goal is like that too. I wanted to learn every day something new. I don't even know
Yes.
how late it is
Yep.
because
Mm-hmm.
if I don't learn something new a day, I just feel like my day is wasted. By the end of
Mm-hmm.
the day, I just feel so sloppy. I don't even feel good about myself.
Yeah.
So I have to learn something new, no matter how small it is, because everybody has
Yes.
to teach you something out there if you're
Mm-hmm.
looking for it. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
Go into business sooner. Don't be so scared.
Right.
Don't be so scared of business. I was so scared of going into business. I thought, oh my gosh, how do I create an LLC? How do I do my taxes? But when I found that purpose of how I could help people, and I realized that business is all about helping people,
That's so
all
true.
those other things fell away. And so that's what I would tell myself is don't be so scared.
That's good. So how can people reach out to you, Annie?
The best place to go is our website to learn a little bit more about us. It's goodaginvestments.com. Or if you want to reach out to me personally, I'm always open and happy to meet new people. You can find me at Annie@goodaginvestments.com.
Thanks, Annie. I love chatting with you today.
Thank you so much, Vinki.